So we are very excited after a long preparation to finally share with you the launch of the Restoration Seed Capital Facility, which is focusing on unlocking private finance that benefits forest and landscape restoration at scale. We have a very exciting agenda for you. There's also the possibility to ask questions. We'll try to answer as many as we can throughout this session. And with that, can we move to the next slides?
Halting climate change and biodiversity loss requires us to transition urgently to new ways of growing the food and resources we need, while also restoring and protecting the forests we depend on. Such a transformation requires significant investment. At present, however, private investment in businesses that combine forest restoration with their production activities is still limited due to high perceived risk, limited track record, and lack of bankable projects. To attract more private investment in this area, the UN Environment Programme has created the Restoration Seed Capital Facility. This finance facility will help to direct investments to business models that combine the restoration and protection of forests with sustainable agriculture and forestry, thereby providing a sustainable livelihood for local communities. The Restoration Seed Capital Facility will achieve this objective by providing 3 lines of pre-investment support on a cost-sharing basis. The first of these will help fund managers raise new investment funds, targeting activities aligned with forest restoration. The second and third support lines will concern already established funds, whereby the facility will first provide co-funding for early-stage pipeline development and subsequently focus on helping projects reach financial close. This will accelerate the rate at which these innovative solutions get financed, increasing the flow of investments aimed at reversing the loss and degradation of forests, ultimately contributing to humanity's goals of fighting climate change, reversing biodiversity loss, and providing a sustainable livelihood for all.
So my name is Ivo Mulder of UNEP, where I lead the Climate Finance Unit. And before you will hear about how this facility works and how you can apply for support, we'll first delve into a panel with welcome addresses from Ms. Christiane Paulus, who is the Director General for Nature Conservation and Sustainable Natural Resources at the Federal Ministry of Environment, Nature Conservation and Food and Nuclear Safety in Germany. André Weidenhout, who's the Director General of the Luxembourg Ministry for Environment, Climate Change and Sustainable Development, and my own director, Susan Gardner, who is the Director for the Ecosystem Division. So with that, if we can move to the next slide, and I would like to give the floor to Ms. Christiane Paulus to give her opening remarks with regards to this facility. So over to you, Ms. Paulus.
Hello, everybody, and first of all, a very warm welcome on behalf of the Federal Ministry for the Environment to this interesting launch today. And I would like to say a few words why the German Ministry for the Environment is engaging in these initiatives and why we think it's so important in these days. Today, we are again facing an alarming increase in COVID-19 infections in Europe and elsewhere. And looking back to the point of origin of the pandemic, we notice that the destruction of nature and land use change led to increased wildlife-human interaction. This, in connection with trade in wildlife, has increased in the last decade the likelihood of zoonosis, transferring diseases from animals to humans. Additionally, the recent reports, the IPCC Land Sector Report and the IPBES report made it very clear. We are facing and have to address the twin crisis of biodiversity loss as well as climate change optimally in one goal. Thus, building better is the challenge ahead, and this overarching challenge has been reflected in the actual EU policy. In the next minutes, I would like to say a few words about the overall framework in which we are acting at the moment, to give you an idea what is all behind that. It all is embraced by the EU Green Deal that has been presented by the European Commission and its President Ursula von der Leyen by the end of December, because before all that happened. And that Green Deal laid out the ambition to become climate neutral by the mid-century. This Green Deal has several parts, the form which come together as a puzzle and a mosaic. First of all, the farm to fork strategy calls for the food chain to better protect the environment and to preserve biodiversity. The EU biodiversity strategy lays out a comprehensive, ambitious, long-term plan for protecting nature and reversing the degradation of ecosystems. And we have another pillar, that is the EU communication on stepping up EU action to protect and restore the world's forest. So that says the policy framework is there, but the focus and the task is now to implement it nationally, regionally, and at a global level. So today's launch of the Seed Capital Assistance Facility for Forest and Landscape Restoration has to focus and find its role in the context of building back better. Yeah, what does that all mean? There's a very good entrance point to discover the huge potential of restoring forests and ecosystems for biodiversity protection, for climate adaptation, and also for mitigation. And that is the Bonn Challenge. This has been launched as early as 2011 and was launched in a joint effort by the German Federal Environment Ministry, by IUCN and the Global Partnership on Forest and Landscape Restoration, and in its first phase aimed to restore 150 million hectares of forest till 2020. It was from the beginning thought that this activity should contribute to several international treaties, that is contributing to the Aichi targets of the UN Convention on Biological Diversity, contributing to REDD+, that is reducing emissions from deforestation and degradation under the United Nations Framework Convention on Climate Change. 3 years later, the New York Declaration on Forest affirmed the Bonn Challenge goal for 2020 and added another perspective on it, another piece of work, that is the 2030 perspective. And it increased the amount of restoring of forest to a total of 350 million hectares. And that was possible because already there we were aware that we really had gained a lot of momentum with this initiative. The 2020 goal was reached already in 2017. And today we have 74 pledges, including 61 countries that add up to restore more than 210 million hectares. I would like to say a few more words on that because I think that illustrates very well the potential that is behind forest restoration. The German government have been supporting many countries in developing and designing policies and to scale up national implementation, and that has resulted in a number of regional alliances that are supporting the initiative. That is the African Forest Restoration 100 or the Latin American Initiative 20 by 20 that has been very successful at the regional level. And one of the very active regional alliances are the countries of the Central American Integration System, CICA, where the idea emerged to propose a UN decade on restoration. It was the country of El Salvador, Lina Pohl, who brought this forward to the United Nations General Assembly, and we finally succeeded in getting this UN decade on ecosystem restoration from 2021 to 2030 approved. That happened in March 2019. And the overarching vision for that UN decade is, I think, more actual than ever. The vision is that we create a world for the health and well-being of all life on Earth, and that of future generations, that the relationship between humans and nature has been restored, where the area of health ecosystems is increasing, and where ecosystem loss, fragmentation, and degradation has been ended. I think it's nothing more than a very good answer to what we see under the COVID-19 pandemic at the moment. Additionally, a global communication effort is envisaged to engage private, public, and civil stakeholder on local, regional, and national levels. And with this in mind, you might better understand why it's a special pleasure for me to announce today our support to this restoration project, the Restoration Seed Capital facility that is managed by UNEP together with the Frankfurt School of Finance and Management. The German Federal Ministry is contributing 20 million euros through its International Climate Initiative. And we are very delighted that Luxembourg, our good neighbors and friends, were right from the start joining us to set up a common effort on this. And we will hear Andre Weidenhaupt saying a few words on that later on. Yeah, we think that the project comes at the very right moment. There has been an exception report, some kind of a feasibility study that revealed as a bottleneck high demands on time and financial resources to identify and develop promising projects and pipelines for investment. It identified long lead times to raise capital for this types of fund and a lack of familiarity with the investment field. But on the other hand, as I mentioned before, the potential for forest landscape restoration investment is huge. And with this project, we aim to alter the perception and overcome the bottlenecks that slow down private investment in forest landscape restoration. And we want to accelerate action in this early stage of market development. We hope that with the support and the expertise provided by the RSCF, we hope to see an increasing number of funds investing more and faster in landscape restoration, and thereby, and that is the circle to the beginning, addressing the twin challenges of biodiversity loss and climate change. Private finance is key to enable countries to meet their goals and commitments, including the Bonn Challenge, the post-2020 biodiversity framework that is going to be developed hopefully next year, the Paris Agreement, and the Sustainable Development Goals. It's a very important block also for the upcoming decade on ecosystem restoration. I hope this overall framework has been giving you some guidance to the talks that we are having during the day. I thank you very much for your interest in the Restoration Seed Capital facility, and I wish you an interesting discussion and a fruitful day. Thank you.
Thank you very much, Christiane. And at the moment, I already see messages coming in all the way from India and Indonesia, as well as Myanmar, from Asia to Berlin, Belgium, Puerto Rico, Ecuador. So I think we have a very international audience already. Thanks also very much for putting the Restoration Seed Capital facility in a broader context of moving towards sustainable consumption and production, the EU Farm to Fork strategy and the biodiversity strategy, but obviously also this UN decade on ecosystem restoration to which this facility will contribute. So many thanks for your opening remarks. And with that, I would like to move to the next slide and to the next speaker. So Andre, over to you.
Thank you, Ivo. Do you hear me?
Yeah, perfect.
Okay, good. Thank you, Ivo, for the opening and also for the introductory words to give me the floor to, and also, let's say, to having organized everything to the launch of the Restoration Seed Capital Facility. For me, this is a very exciting moment. And also from our whole team here in Luxembourg. And I'm very happy that Luxembourg decided to partner with Germany for this new adventure. We did so also very recently on another project, which is the launch of the City Climate Finance Gap Fund, which we launched basically 1 month ago. And this is our second bilateral, multilateral common approach. And on behalf of the Luxembourg Ministry of the Environment, Climate and Sustainable Development, I would like to join Christiane Paulus in welcoming all the participants and thank the organizers for making this event possible, despite the actual crisis. It would certainly have been more pleasant to meet in person and to raise a glass at the end of the day, but a virtual session certainly has also its merits if it is not that it has a very lower CO2 footprint. As you all know, we are currently facing a dual crisis, the crisis of climate change, but also the crisis of biodiversity loss, with a heightened state of emergency. The degradation, fragmentation, and unsustainable use of land enhances this crisis even further. It increasingly threatens several key ecosystem services, putting biodiversity at risk and worsening the world's resilience to climate change and natural disasters. It is therefore key to address and promote sustainable land use, the protection and restoration of natural capital head-on. We all know the vital role of forests with regard to the sequestration of greenhouse gas emissions and the preservation of biodiversity. Globally, around 2.4 billion people, 1/3 of the entire human population, depend directly on forests for wood, for cooking their daily meals. We all depend on forests to provide the services that support life, such as food, oxygen, and pollination. Forested watersheds provide 3/4 of accessible fresh water, and forests can provide 30% of the greenhouse gas mitigation required by 2030 to keep global warming well below 1.5 degrees centigrade. Despite the importance of forests to all, deforestation is running apace. Land clearing for agriculture, mining, and infrastructure development has led to the complete loss of about 30% of global forest cover and the degradation of a further 20% of it. That is why we need to switch to economic models based on a sustainable use of forests that take into account their ecologic value and that build up local value chains. Luxembourg actively supports this development through blending public and private finance, especially climate finance, in the investment fund sector, where Luxembourg's financial center is a market leader. Over the past years, Luxembourg has developed into a hub for natural capital funds, and we see increasing interest from the private investment community to invest more into natural capital, forestry, and landscape restoration in developing countries. Several forest and land use initiatives have seen the day in Luxembourg since the adoption of the Paris Agreement and are being supported with public international climate finance funding in order to leverage private sector funding. And I name a few of them, the more Luxembourgish ones. The Forestry and Climate Change Funds, which aims at providing financial support to businesses, communities, and smallholder farmers who manage secondary and degraded forests in the tropics of Central America. the Blue Natural Capital Financing Facility, a cooperation project that Luxembourg runs together with IUCN, whose projects aim to protect, restore and enhance natural ecosystems to better support climate change adaptation and mitigation efforts whilst conserving biodiversity and other vital coastal and marine natural resources. And last not least, the Luxembourg's government is providing first loss guarantee through the Luxembourg EIB Climate Finance Platform to the Land Degradation Neutrality Fund that aims to provide long-term financing in sustainable land use projects worldwide, using mainly a combination of project finance and structured commodity finance techniques. And by the way, this is a joint project of our ministry and the Luxembourg Finance Ministry, and we have a lot of projects in common between environment and finance ministries in Luxembourg. However, many of these investments may still bear some risks and require more time and effort to develop and prepare. To accelerate this trend, the Restoration Seed Capital Facility will provide support in the form of operational capital to fund managers and investment advisors for the crucial early stages of raising new funds and developing robust pipelines of sustainable land use and restoration projects. This will enable an acceleration and scaling up of the movement of private investment away from business as usual and towards more sustainable land use practices. From a public donor perspective, we need to see significant positive impact on climate mitigation and/or adaptation, and seek positive biodiversity and livelihoods impacts from our committed climate funding to the Restoration Seed Capital Facility. Permanence of emission reductions, addressing leakage concerns, looking at the Paris Agreement aligned corporate strategies of fund managers and investees are equally important. In the view of the Luxembourg government, climate action in sustainable land use needs to go together with the strengthening of local communities, working with smallholders, protecting human rights and indigenous peoples, and enable women empowerment. These fundamental values need to be respected in all Luxembourg-funded international climate finance activities and shall be promoted throughout the whole value chain of commodity production. We look forward to join forces with our donor partner Germany, the implementing partners UNEP, the Frankfurt School of Finance and Management, experts and NGO representatives, and all of you to make the Restoration Seed Capital Facility a success in mobilizing more climate finance for restoring our natural capital. Thank you very much for your attention.
Thank you very much, André, and a big thank you to both the governments of Luxembourg and Germany for your support to make this facility a reality. We're getting a lot of comments and questions from people around the world, which is very encouraging to see. I think especially given that Luxembourg is a leader for the fund management industry, I think this initiatives as well as others such as the International Climate Finance Accelerator, the Blue Natural Capital Financing Facility, and the project that you're having with the EIB are all basically part of that broader vision that Luxembourg has. I would like now to turn to Susan Gardner, our director, to give the opening remarks from the side of UNEP and also outline why this Restoration Seed Capital Facility is needed. So over to you, Susan.
Thank you so much, Ivo. And thank you very much for the opportunity to speak today. It's a pleasure and an honor to be able to contribute some thoughts following up from the Director General's from Luxembourg and Germany's very inspiring vision. We heard from these speakers how strong the case is of the importance of forest protection and the importance for preserving our biodiversity, for climate change on adaptation and mitigation, as well as providing livelihoods for millions of people. Yet there's an estimated 2 billion hectares of degraded land in the world. And between 2015 and 2020, a forest area the size of Portugal was lost every year. IPBES estimates that deforestation and other types of land degradation cost the world about 10% of global GDP every year. If this wasn't enough to convince us that restoring forests is a priority, as we heard from Director General Christiana, we've been given another important reason in the COVID virus. Because investing in our forests is really key when we look at how we build back better after the pandemic. It's the way to safeguard our environments, our health, as well as our economies. Just recently, the UNEP Executive Director, Inger Andersen, highlighted this point during the week of the 75th UNGA and emphasized that promoting healthy and restored forests has to feature strongly in a green COVID recovery effort. She said that without halting and reversing deforestation, climate, biodiversity, and sustainability goals cannot be met. And this is why UNEP is so proud to launch, together with the Frankfurt School of Finance and Management, the Restoration Seed Capital Facility, and why we're incredibly grateful to the German Federal Ministry for Environment, Nature Conservation, and Nuclear Safety, and the Luxembourg Ministry for Environment, Climate, and Sustainable Development for the funding that's made this initiative a reality. Because this kind of action is so urgently needed. By some accounts, there's more than $36 billion per year needed to restore degraded land. And it's unrealistic to expect that this can come from public sources alone. We need to unlock private capital to be able to achieve this level of investment. And this is what makes the Restoration Seed Capital Facility so timely. Not only can it help halt the degradation of our forests, but it's also showing us the value of innovative thinking and the enormous potential for public-private partnerships. By de-risking investments in forest restoration, these projects become more attractive for private investors. And using public funds to attract private investment in restoring forests is a really exciting way forward for rebalancing our relationship with nature. The scale of this challenge is so big that we need to unlock private sector funding in order to address it. And doing this can help us take this new innovative project to scale. And this fits hand in glove, as we've heard from the speakers before, with the upcoming UN Decade on Ecosystem Restoration. Therefore, I believe this is really only the beginning. And now that the Restoration Seed Capital Facility is open to investors, I hope that those of you here today from the financial sector will share our excitement about this opportunity and decide to invest in projects that will both benefit the bottom line as well as ultimately our planet. Possibly other governments also will share in the example from Germany and Luxembourg and be eager to join this effort. Because both government and public sectors have an important role to play when it comes to addressing the degradation of nature. And thank you so much, and I wish you very inspiring and productive continuation of this meeting.
Thank you very much, Susan, for your opening remarks and also for laying the basis for why this Restoration Seed Capital Facility is needed. I see a lot of questions also coming in asking about how this facility works, what it does, what it doesn't do, and we'll go into that in a minute. Here you already see an infographic of the different types of support that it will provide. But if we can move to the next slide, the second half of this webinar will focus specifically on how it works and how you can apply for support. So if we can move to the next slide, and just want to remind attendees to ensure that their microphone is muted. As Susan indicated, there is more than 2 billion hectares of degraded land, and a lot of capital is needed to restore what's been lost. By some estimates, the Bond Challenge, for example, $36 billion a year is needed to restore degraded land. And obviously some of that money will have to come from governments. And I think it's very heartening to hear Christian indicating that governments have committed to restore more than 200 million hectares already. But in order to meet the scale of the challenge, we need to unlock private capital as well. And at the moment, a lot of that is up on the shoulders of a few pioneering facilities. And what we're trying to do with this restoration seed capital facility is that we stimulate and push more investors to be able to set up funds in this space and to be able to invest in more projects. Why is that needed? At the moment, there is a very limited track record of private investments going into forest and landscape restoration. It's also perceived as a high risk and often at a high cost. And there are few so-called bankable projects, to put out a buzzword. Bankable in this case meaning something that has an attractive risk-return profile for investors. So for these and other underlying barriers, we are today announcing this new facility. So if we go to the next slide, you will see the different types of support that the facility provides. Can we move to the next slide, please? So the first one is for fund development. So those investors who are tuned in for this launch, those investment advisors who are trying to raise capital for a new fund, they may be eligible for support from this facility. This will be a so-called reimbursable grant, meaning that if a fund is able to reach financial close, we can assume that the fund is going to be commercially viable and therefore able to pay back the public funding that the facility has provided. The second support line is for pipeline development. So making sure that funds have a solid pipeline of investable projects, basically. The third support line is for what we call project development. So those are costs and efforts that the fund manager puts in for those projects that are most promising to bring them to financial close. Financial close in this case meaning that an investor decides to put equity, quasi-equity or debt into a project. Also in that case, the third support line is a so-called reimbursable grant, meaning that if a fund manager manages to close one or several projects, we can assume that those projects will generate a cash flow and therefore the public funding provided to the facility can be reused. If we go to the next slide, you will see the terms and conditions of this facility in a bit more detail. So the first support line for fund development, we expect that fund managers need up to 2 years to raise capital for a new fund. The facility will provide up to a maximum of $750,000. Noting please that at least 50% of the eligible cost will have to be borne by the investment advisors and fund managers that this facility works with. This also ensures skin in the game on the side of fund managers and efficient use of public funding. The second and third support line come as a package with pipeline development, basically covering 1/3 of the support, and project development covering 2/3 of the support that the facility provides. The total amount that a fund manager is able to draw upon from this credit line is $2.5 million. Please note again that at least 50% of the eligible costs need to be covered by the investment advisor or fund manager. So to those governments who are participating in today's webinar, this basically ensures efficient use of public funding and also leverages private capital in 3 important ways. As I mentioned, the first one is the fact that at least half of the cost will have to be borne by investment advisors and fund managers that this facility works with. The second is indirectly that if a fund manager is able to close a fund or able to close one or several deals due to this facility, indirectly the facility has helped to leverage a much higher amount of private capital. And given that the first and third support lines are so-called reimbursable grants, in case these are triggered, funds will flow back to the facility to be reused or recycled, and thereby the facility tries to make use in an efficient way of the public capital that is available in this facility. So if we move to the next slide, as a UN agency, we also want to make sure that the types of initiatives that we work on are not just the sum of individual contracts to fund managers, but that we advance on a broader agenda. So through knowledge management, through outreach and advocacy, we hope to be able to reach developing country governments, NGOs, to share insights and collaborate on this initiative. We try to convene through UNEP the key players, including the fund managers and investment advisors that we are onboarding, to share lessons learned between those, and basically make sure ultimately that the sum of the impact of this facility is larger than the individual contracts that it will provide. And through that, ultimately mobilize new sources of financing. If we move to the next slide, you'll see that in this way, this facility tries to contribute to several international agreements. First of all, the Paris Climate Agreement, both in terms of climate mitigation, but also climate adaptation, that it indirectly contributes also to the post-2020 CBD biodiversity framework, and more generally to the Sustainable Development Goals. So that is basically how this facility will operate. We will now go into what you can do as fund managers to apply for support for this facility. And I would like to move to the next slide and turn over to Thomas Richter. But before doing that, please do make sure that your questions are being recorded. We'll try to address as many as we can in the limited time that we have. So over to you, Thomas.
Thank you very much, Ivo, for the introduction. I welcome everyone in the name of Frankfurt School to the launch of this facility today. I will now give you an introduction about first the eligibility criteria which potential partners need to fulfill, and second about the engagement process with the facility. So let's start with the eligibility criteria. First of all, we're specifically looking for fund managers and investment advisors to funds. There were already a few questions about standalone projects, but the facility can only engage with fund managers or investment advisors to funds. So standalone projects or project ideas, business cases cannot be supported individually. Second of all, it is dedicated to fund managers raising a new or managing a current investment vehicle. Ivo already explained that there's different support lines for each of the different cases. And they need to be dedicated to sustainable land use and forest landscape restoration. So these two criteria are the main intro criteria if you want to engage with the facility. Then there is a limitation in geographical scope, which means that all ODA eligible countries are eligible for the facility. This means that the projects of the funds need to be in these countries. The list is set by the DAC, and the facility will focus on Latin America, Africa, and Southeast Asia, which is where naturally most of the tropical forest areas are located, and a lot of the forest loss has been happening. When it comes to the sectors and activities potential projects that fund managers need to engage with, it is mainly about forest restoration and protection combined with sustainable land use activities. So the overall goal is the forest restoration and protection, and this then can come along with, for example, agroforestry, which is the combination of crop growing and trees on the same area, or silvopastoral systems, which will then be pasture and trees. The most common of these is generally sustainable forest management, where every form of sustainable management forests can be part of the project for the facility. Another key area would be bringing back tree coverage to degraded lands, where replantation could happen on these areas. But it's not only dedicated to the forest itself, even non-timber forest products can be in the focus. Examples for these would be juice production or fruit production in the area, coffee as well. To step away one step from the actual usage of the forests, the facility can support the generation of carbon credits as well as ecosystem services from these forests which are under restoration and protection. Last but not least, supply chain investments can be supported too. Examples for typical supply chain investments in the restorative activity would be a tree nursery. Since we're active in the area of impact investing, this comes along with an ENS management. There it would be important that all potential partners make sure that the regulations, laws, etc. Of the regarding countries are aligned, and there needs to be an environmental and social impact reporting framework. This is specifically for the projects at the pipeline of the funds to make sure that these projects are screened regarding their environmental, social impact. And it is a climate financing mechanism, which means that climate risk needs to be taken into account for the projects as well. These were the first eligibility criteria. We have 3 more which we can look at. The first one of these is regarding the innovation of the fund. So the facility is specifically looking for novel strategies or business models which the funds can apply. So funds which already have existing funds in an area do not apply to this category, because we want to see some sort of stepping out of the current comfort zone. An example for this would be that if a fund is active in a certain region, for example, Southeast Asia, and it duplicates and moves on to another continent, Africa, this would be a novel geography for the fund and thereby would fulfill the eligibility criteria. Not the entire investment volume of the fund needs to be dedicated to FLR. The threshold has been set to 75% of it. And there is one more criteria in that area. This is regarding the replication and scalability. To really unlock more private capital, it is beneficial if the investment ideas and projects are designed in a way that they can be replicated. There's one more point regarding the requirements of the fund capacity. So the fund capacity needs to be in the way that the fund can meet the financial and technical expertise for realizing the projects in the pipeline. So what we really like to see would be that we can combine forest landscape restoration and forestry expertise with financial expertise to generate synergies. Another requirement is that the fund is represented by on-ground teams and not managing all the activities remotely. And then there is one last point where the facility really would like to see that the fund managers engage with the focus and the alignments of the objectives of forest restoration. The last point on the slide is the additionality rationale, which is to ensure that the donor money serves its purpose. So there is the first point of financial additionality, which means that activities need to be enabled beyond business as usual. Then there is the ENS additionality, which is there to make sure that it translates into positive environmental and social impacts. Furthermore, the restored and forest ecosystem need to sustainably maintain the beneficial functions, which secures that the partners interact on a long-term basis with the area. And the last point is again about climate change, which is the overall achieving goal of the facility. So the impact of the different projects needs to be demonstrated in terms of climate change and climate change adoption. If potential partners meet these eligibility criteria, we would be happy to engage with these. And I'd like to explain now how the engagement process works. In general, from a perspective of potential partners, there is 4 major steps. So once it's clear that the activities of the potential partners are in line with the facility, we will be happy to get in contact with you through our email address. This can happen at the point of interest, so all year around. There is no specific time frame or period for applications. Please provide all necessary information about your investment ideas and about the fund with these first getting in contact. You can find a detailed list of which information should be included in these contact forms on the website. So once the contact happened, we would like to schedule a first virtual meeting. This usually happens 1 to 2 weeks after the first contact. If then all criteria are met, we would like to invite you for proposal submission, which is a guided process in which we can provide templates for the proposal and develop this proposal together. This is usually happening within a time frame of 3 to 6 weeks, depending on the process and if all data is available. After that, the fourth step starts, which is the internal processing within the facility, where we start our approval process, which is conducted from the due diligence and the final co-financing decision. This would be the 4 steps which potential partners need to get through. I'd now like to give a bit of an overview of how the internal process works, which is shown on the flow chart. If we could move to the flow chart, thank you very much. The flow chart shows 5 different steps in the application process. Step 1 to 4 happens before the disbursement of the donor money, and after the disbursement, the implementation phase starts. So on the ordinate, we can see all engaged parties in the process. At the very bottom, the potential partners. So the potential partners, they submit the proposal, and then it moves up in the processing system of the facility, and if all criteria are met, is approved in principle. Then a due diligence process will start, which is normally an on-site due diligence. Currently, we're limited in travel restrictions, so let's see how the next few months will develop. So then the due diligence will be performed, and the results of them will be presented to the investment committee, and if everything's aligned, there is the final approval for the co-financing decisions. This is when the contracting phase starts, and once the contracts are signed, the disbursement of the money can take place. And that's where the last step happens, which is the implementation phase. As Ivo explained earlier, it usually takes between 1.5 and 4 years, depending on the support lines. And during that phase, partners are required to report quarterly to the facility about the usage of the money, etc. This was a brief overview of how the engagement with the facility works. I would like now to go over to the question section together with Ivo.
Thank you very much, Thomas. And I do see that there are lots of questions coming in. So I would like to ask the help of my colleague Martin Halle to ensure that we are able to answer as many questions as we can in the time that rests. So Martin, can I give the floor to you?
Thank you very much, Ivo, indeed, and thank you everyone for asking all your questions in the chat. We've tried to monitor as many of these as possible, and hopefully we can answer a few of these in the coming minutes. Ivo, maybe I'll go to you for the first. There have been a lot of questions on the coverage of the facility and what is eligible, and I know we've presented that, but we went quite fast through it, so maybe it would be good to answer some of the questions around who exactly is eligible for this facility and whether governments or NGOs in particular have come up a lot in the questions, are eligible for support under this facility.
Yeah, thank you very much, Martin. So in terms of who is eligible, so this facility tries to is specifically focused at private investors and specifically fund managers who are trying to raise capital for a fund that is directly contributing to forest and landscape restoration. We also know that this is not a typical field where there are many projects lying around. And in many cases, a project developer who has 1 or 2 projects decides to set up a fund themselves as a result of it. So I would say, to answer this question, the first one being a fund manager, so a legally registered entity that is already having existing funds or trying to set up a new first fund. The second being investment advisors who are often starting from a base of already focusing on attracting capital for one or two specific projects and are basically morphing into becoming a fund manager themselves. That is not to say that grants and funding to NGOs is not needed, but that is not the key purpose of this facility. In terms of what it pays, the facility will mostly pay operational costs because it is the limited liquidity and the lack of operational funding that is hampering fund managers to basically put enough time and effort in being able to successfully close a fund, as well as build a pipeline of potential projects and invest in bringing projects to financial close. In many other sectors, there are ready-made projects where the only thing that a fund will have to do is basically do due diligence on the investee company. That is not the case in this very nascent field. So in terms of the types of costs that will be covered, you can think about legal setup cost, travel cost, marketing materials when trying to raise capital for a new fund. When it comes to project development, you can think about free prior informed consent, legal cost, due diligence cost, basically the cost that a fund manager is able to, that has to invest before they're comfortable enough and before an investment committee is willing to sign off on an equity stake in an investee company. So I hope that that answered the question.
Thank you very much, Ivo. I think that's clear. We also have a few questions on how the facility will actually operate, and just to ask Thomas from Frankfurt School to help us there with a question around the requirement for co-funding that we are asking from the cooperating partners, and whether that has to be own funding from the cooperating partner or whether that can come from other sources such as grants or other.
Thank you, Martin. Regarding the co-funding, it is required that each funding, each dollar of facility money is matched with the dollar of equity from the fund side. So it is not possible to collect money from the Restoration Seed Capital Facility and match this money with other donor money. So this will not be possible. Every dollar needs to be covered by another dollar from equity, which is raised by fundraising from other investors. Did that answer the question, Martin?
Yes, thank you very much. And just a related question that's just come in as you were speaking, asking if the co-funding can be in kind, so in terms of the investment in time from the cooperating partner rather than as cash.
No, it needs to be available at the same time. And in cash.
Thank you very much. Ivo, we have a question here as well in terms of one that's come up quite a few times in the chat that is making the point that there are quite a few initiatives already in this space looking at forest restoration and investment and various kinds who have overlapping areas of interest, and asking how this facility and this project intends to work with these initiatives to make sure that we are not competing.
Yeah, that's a very good question that's been asked, and obviously, while we are interested and excited to announce this facility, the last thing that we want is to overlap or compete with other initiatives. We have done background analysis before launching this facility. There are a number of initiatives out there that are very complementary to this one, including Partnership for Forest, the Dutch Fund for Climate and Development, the International Climate Finance Accelerator, and others as well. And we envision to at the very least, have a have an informal engagement with these facilities to make sure that any support being provided by the RSCF, the Restoration Seed Capital Facility, does not pose any issues with support provided by other facilities. But in conducting the analysis, we have not found that any of the existing facilities is providing the kind of support that the Restoration Seed Capital Facility provides. But it is a very good question, and we are very mindful that we want to be efficient with the funding that this facility has, and definitely not make sure that we compete or basically provide overlapping support. What I can imagine is that initiatives that would benefit from very early stage mentoring, for example, and UNEP is also in the process of setting up a mentoring platform, that those initiatives would basically graduate, so to speak, to potentially receiving support from the Restoration Seed Capital Facility. Or that when an initiative is being supported by the International Climate Finance Accelerator, that if there is an additional justification for support for this facility, that we are basically in close contact with them, and in that way basically try to really align our objectives. I hope that answered the question.
Thank you very much, Ivo. So one more for Thomas over at Frankfurt School. There is a request to explain a bit better how the nature of the reimbursable grants under the fund development support line and the project development support line, how those works, what would trigger a reimbursement, and what happens if the fund or project is not successful in the timeline that is involved.
Okay, thanks for that, Martin. It's actually Derek Campbell speaking. So I guess start with the back end of the question first. If a project or a fund does not materialize that is supported, then it essentially becomes more, it will become a pure play grant, essentially, if we get to that point in time, and it would essentially be considered to be a write-off if we agree with the partners that it is not going to be realized. And then typically, and so this modality also comes from the current Seed Capital Assistance Facility in renewable energy, which we run alongside colleagues at UNEP, that once a fund reaches a first close, typically the facility should be repaid. I mean, there might be some instances that we have to stretch out the repayment based on a first close size. So that will really be dependent. If the fund has a smaller close, we're not going to try and receive all the funding back at once, because that will affect the management fee and the operations of the fund. Similarly, for projects, we typically would be repaid at financial close. Once it's reached the full financial close, debt package has been drawn down, etc. If projects are all equity financed, we might take a bit of a different view on that side and also stagger potential repayments. But once there's a final investment decision and cash flows can, or not cash flows, but equity and debt is drawn down, or just equity, we do typically require repayment to the facility.
Thank you very much. I hope that clears that up. Ivo, I have a difficult question for you, but I know based on your previous experience, probably you can answer that. But there's been a question coming up several times in the chat on how this approach that the facility uses draws upon the experience of the RED program and the RED Plus mechanism in trying to draw private investment into forest restoration and protection.
Yeah, that's indeed a very challenging question. I mean, I think it depends a little bit on how we define. I mean, RED Plus, for those online who do not know the acronym, RED stands for Reducing Emissions from Deforestation and Forest Degradation, as well as Protection, Conservation, and Sustainable Use of Forest. So the main underlying idea behind RED is that forests need to have a price in order for these to be protected. And there are international funds, such as managed by the World Bank, the Forest Carbon Partnership Facility, the Biocarbon Fund, but also the Green Climate Fund, who are able to pay countries for so-called results-based payments. So those countries that can demonstrate a reduction in deforestation against the historical baseline, and where a biannual update report is being submitted and approved through the UNEP CCC channel, they are able to basically get access to funding for that. But that is basically government to government funding. What this facility basically tries to do is, in many cases, and I'll be very interested to see what kind of proposals will be coming in. The underlying cash flow generating activities could be around forest carbon. In many cases, I expect there will also be some commodity related cash flow, be it sustainable management of timber forests, as well as agroforestry or other forms of agriculture. So to answer the question, we see it as a key, it's up ultimately to the fund managers to determine what kind of underlying cash flow activities they envision. It is up to the Restoration Seed Capital Facility to determine the probability that a fund will be successful. And again, that could be through forest carbon, especially if there's going to be a floor price for that. But I expect the majority of the underlying cash flow to be generated by some form of commodity. Thanks.
Thank you very much. One very precise question here for Frankfurt School, asking if support line 1 can be used to directly cover fundraising costs, such as placing agents in country, or being used to support market initiative to facilitate the distribution of such funds. Beyond the legal costs, could other support needed for fund development be covered, such as fund structuring costs, for example?
Thank you, Martin. Yes, the kind of examples you were given are possible to be co-funded, co-financed by the seed capital facility. All the costs which are related to the fundraising can be covered. What cannot be covered are management level salaries, for example, but studies which are required for the fund establishment, legal costs for lawyers, and so on, these can all be covered by the facility.
Thank you very much. Ivo, there's one question here that comes up a lot, and I know you've clarified the eligibility of this facility in terms of it being really primordially driven towards fund managers or investment advisors. But the question comes up a lot in terms of project developers and how they can get involved, if not with the facility, at least in this area of investment, and whether this facility or the wider project offers anything for project developers who are looking to get their projects funded.
Yeah, that is a good question. I think it's certainly something we can look into. I think another person already asked the question about how this facility fits in the broader niche of other initiatives. And you may have heard about Partnership for Forests, which is funded by the UK government and executed by Palladium, Systemic, and McKinsey. And they are providing support directly to project developers, for example. There are also other initiatives that are providing direct support to NGOs and project developers. So we felt that in some ways that is already covered. And the niche that was missing, at least in our opinion, and based on the research that we've conducted, was the liquidity and operating cost constraints that fund managers and investment advisors are facing. If it turns out that there is a lot of demand from project developers that are not being met by other initiatives, then we can see with the steering committee if a provision can be built in. As I mentioned before, the idea is that the facility is fit for purpose and trying to basically unblock some of these financial barriers. And again, if it turns out that this is a barrier that is insufficiently being addressed by other facilities, we can look into it. But for the moment, we expect that that others are able to provide that.
Thank you very much. One last question, I think, for Frankfurt School, and then we will have to wrap this up. But One quick question on project size. There's a question here on whether there is either a target project size for the facility that we are looking to support, or whether there are minimum or maximum project sizes for supports that are implicit in our conditionality.
The facility is very flexible in this area, as long as the amounts which were mentioned by Ivo previously for the support lines are not reached. We're happy to look into every different project and then make an individual decision. So there is no general limit.
Thank you very much. With that, I think we've unfortunately run out of time, but hopefully we've managed to answer most of your questions. Ivo, the floor is yours again. Thank you very much.
Yeah, and also, thanks to all speakers. Again, I would first like to thank the governments of Luxembourg and Germany for making this initiative possible. To my own colleagues in UNEP and obviously to our partner, the Frankfurt School for Finance and Management. I think it's very encouraging to see so many different participants from across the world, from Asia to Africa to Latin America, Europe, all tuning in for this. I would like to state that this facility is open for business as of today. So you can contact us through info@restorationfacility.org if you do feel that you're eligible for support. For media inquiries, you can contact my colleague Aurelia Blin at blin@un.org. And there is a landing page as well for this facility that explains everything in a little bit more detail. Again, a big thank you to the speakers, André Weidenhaupt, Christian Paulus, Susan Gardner, Thomas Richter, and also Martin Halle for moderation. And also a big thank you to all participants for your time, especially given that there are so many online events. Very grateful for all the support and interest that you've shown to this. And with that, we do hope to receive many proposals and that we are able to announce the first partners in the months to come. And with that, a big thanks and have a good day.